All right, so Bitcoin. Yeah, big swings lately, huh? We're
Yeah,
going to take a deep dive into what's going on.
that sounds good.
We've got this Cointelegraph article. It's called Bitcoin Needs Sharp Bounce at 88K as S&P 500 Echoes COVID-19 Crash.
Wow.
Published today, January 11th, 2025, so it's hot off the press.
Fresh.
And the big question is, why is Bitcoin doing this? What could happen next?
Yeah, well, it seems like, Bitcoin is really reacting to the wider financial world these days,
Hmm.
especially the U.S. stock market. It's been having a very volatile day, and this article highlights that connection.
Okay, so Bitcoin dipped below $95,000 today after some big swings on Wall Street. What exactly triggered this?
Well, the trigger seems to be U.S. employment data.
Interesting.
Yeah, and interestingly, this data initially pushed Bitcoin towards $92,000,
Hmm.
but then it quickly rebounded.
Okay.
Now, Charles Edwards from Capriol Investments calls this market response a bearish overreaction.
A bearish overreaction.
Mhm.
But strong employment is usually good news, right?
Right.
So is he saying this dip might actually be a good sign for long-term Bitcoin holders?
Yeah, that's exactly what he's suggesting.
Okay.
He argues that lower unemployment could lead to higher interest rates for a longer period.
Hmm.
Now, at first glance, that sounds bad for risk assets like Bitcoin,
Right.
but Edwards thinks it could actually extend the bull market in the long run.
Interesting. That's a bold take. He's not worried about those higher interest rates scaring investors away.
Well, he draws a fascinating parallel to the market landscape following the 2020 COVID-19 crash.
Okay.
He points out similarities in the S&P 500's put-call ratio then and now.
Yeah, I know how that works. But for our listener, could you quickly recap why that's important in this context?
Sure, so basically a high put-call ratio suggests that more people are betting on the market going down.
Right.
Edwards argues that the recent spike in the S&P 500's put-call ratio mirrors what we saw during the COVID-19 crash lows.
Hmm.
He sees it as a sign of a potential overreaction, just like back then.
That's a fascinating parallel to the COVID crash. Do you think we're seeing history repeat itself?
Well, markets are cyclical, so identifying patterns can be useful,
Right.
but it's never a guarantee.
Right.
However, it's worth noting that the article also mentions an increase in bets on a Fed rate cut in late January.
Okay.
It's a small percentage, but it suggests some investors are anticipating a change in direction.
Okay, so we've got these conflicting signals, some pointing towards continued growth, others toward a potential downturn. Where does Bitcoin fit into all of this?
Well, the article highlights analysis from Bitcoin Data 21, who points out a critical support level for Bitcoin at $88,000.
Why is that $88,000 level so important?
Well, support zones are price levels where buying interest is expected to be strong enough to prevent further price declines.
Right.
If Bitcoin breaks below this support, it could signal a deeper correction.
Hmm.
Bitcoin Data 21 warns that if this level is breached, we'd need to see a sharp recovery to avoid a prolonged downtrend.
Yeah, they're not just basing this on gut feeling, right? How are they evaluating these market trends?
Well, they're using technical analysis tools,
Okay.
specifically the Relative Strength Index, or RSI,
Right.
which measures the magnitude of recent price changes to evaluate overbought or oversold conditions.
Got it.
They also noted similarities in the two major Bitcoin corrections since its all-time high in December.
So we've got Charles Edwards saying the dip could be a good sign, and Bitcoin Data 21 warning about a potential deeper correction.
Right.
And then there's that whole mango markets shutdown after their SEC settlement.
Oh, yeah.
It's a lot to process.
It is a lot to unpack,
Huh.
even though the article doesn't explicitly link the mango market's situation to Bitcoin's price.
Yeah.
It's certainly possible that it's contributing to a sense of uncertainty in the crypto space.
Does this shutdown, even if unrelated to Bitcoin, feed into this potential market overreaction we're seeing?
Well, it's definitely a factor to consider. Remember, the crypto market is still relatively young and can be sensitive to these sorts of events.
Right. Something like that could shake investor confidence. Even if it's not directly related to Bitcoin, it makes you think, is Bitcoin growing up and joining the adult table of finance? It's no longer that rebellious teenager in the corner.
I like that analogy.
Yeah.
And as it matures, understanding these interconnected relationships becomes even more vital. We're starting to see Bitcoin's increasing connection to traditional markets,
Right.
which might explain why it's reacting so strongly to things like U.S. employment data.
Okay, so then we've got this tug of war going on. Bitcoin's growing up, becoming more entwined with a wider financial world, but it's also still susceptible to these shocks and uncertainties that come with being part of a relatively young market. It's a fascinating, if somewhat confusing time for Bitcoin.
It certainly is, and that's why it's so important to stay informed and look at the situation from multiple angles.
Well, before we get ahead of ourselves, let's rewind a bit. The article highlighted the importance of that $88,000 support level for Bitcoin. Can we break that down a bit more for our listener? What would a sharp bounce actually look like, and what would indicate a strong enough recovery?
Sure. So a sharp bounce typically involves a significant price increase in a relatively short period of time, signaling that buyers are stepping in with force.
Okay.
But it's not just about the price going up. We'd also want to see an increase in trading volume accompanying that price jump.
So volume is key here. We need to see conviction from buyers, not just a temporary blip.
Exactly. Volume is a crucial indicator of market strength. A price increase on low volume could be a false signal. A temporary blip rather than a sustained rally.
You got it. So if we are indeed playing chess with Bitcoin, what's our next move?
Well, that's where you, the listener, come in.
Okay.
We've laid out some key pieces of the puzzle: Bitcoin's reaction to the wider market, the importance of support levels, and the role of technical analysis like the RSI. Now it's your turn to do your own research and decide what this all means for your own investment strategy.
Don't panic, don't celebrate, just analyze.
Yeah,
Sounds like a solid plan.
precisely. It's about finding that sweet spot between staying informed and not getting overwhelmed by the constant influx of information and differing opinions.
And speaking of information and opinions, there's one more piece of this puzzle we haven't fully explored yet: those technical analysis tools. Let's dive into that a bit deeper in the next part.
That sounds like a plan. There's a lot more to uncover there.
All right, so we talked about those technical analysis tools. It seems like everyone's trying to decode those squiggly lines to predict Bitcoin's next move.
Well, there's a reason for that. Technical analysis, when used correctly, can provide valuable insights into market sentiment and potential price trends.
Right.
It's all about identifying patterns and understanding the psychology behind market movements.
So it's not just about blindly following signals, right? You always need to consider the bigger picture.
Absolutely. Technical analysis should never be used in isolation. You need to combine it with fundamental analysis, news awareness, and, as always, a good dose of critical thinking.
Speaking of critical thinking, I'm curious about those similarities Bitcoin Data 21 mentioned between the two major Bitcoin corrections since its all-time high in December.
Yeah.
What kind of patterns are we seeing there, and how can those inform our understanding of the current situation?
It's fascinating, isn't it? Markets tend to rhyme even if they don't repeat exactly.
Yeah.
In both corrections, we saw a sharp drop followed by a period of consolidation, then another drop before a recovery began.
Okay.
This suggests a possible pattern of lower highs and lower lows, which could indicate a longer-term bearish trend.
Okay, so potentially a sign of caution, but we also have Edwards suggesting the current dip might be a buying opportunity.
Right.
How do we reconcile these seemingly opposing views?
Well, that's the challenge and the excitement of analyzing markets. There's rarely a single right answer.
Right.
Different analysts can interpret the same data in different ways,
Right.
leading to different conclusions. It's important to remember that no one has a crystal ball.
It's like we're assembling a puzzle, but with some pieces missing and others that might not even belong.
Exactly. And that's why it's crucial to approach all analysis, whether technical or fundamental, with a healthy dose of skepticism.
Right.
Don't blindly follow any one expert or indicator. Consider multiple perspectives, weigh the evidence, and form your own conclusions.
So to our listener who might be new to all of this, what are some key things they should keep in mind when navigating the world of Bitcoin?
Well, first and foremost, remember that Bitcoin is a volatile asset.
Yeah,
Prices can fluctuate wildly in short periods,
for sure.
and there's always the risk of losing money.
Definitely not for the faint of heart.
Indeed, it's important to have a clear understanding of your own risk tolerance before investing. Start small, learn as much as you can, and never invest more than you can afford to lose.
Great advice.
Well,
It's easy to get caught up in the hype, but it's crucial to remember that there are risks involved and not just financial risks, right?
right. There are also security risks to consider. Choose a reputable exchange, secure your wallets properly, and be aware of common scams and phishing attempts.
Right.
Do your research and be cautious.
It's like venturing into a new and exciting territory. You need to be prepared, informed, and cautious, but it can also be incredibly rewarding, both financially and intellectually.
Exactly. It's a journey of discovery.
Yeah.
And while there will be bumps along the way, it's a journey worth taking for those who are curious and eager to learn.
And speaking of learning, I think we covered a lot of ground today. We've explored Bitcoin's recent price movements,
Yeah.
delved into technical analysis and market sentiment, and even touched on some broader market trends. But I have a feeling there's still more to unpack.
You're absolutely right. There's always more to learn, more to analyze, and more to discuss.
Right.
But for now, I think we've given our listeners a solid foundation for understanding the current state of the Bitcoin market.
Absolutely. So to recap for our listener, we've got these fascinating but potentially conflicting signals about Bitcoin's future. We've got technical indicators suggesting a possible bearish trend, but we also have analysts pointing to the current dip as a buying opportunity. And all of this is happening against a backdrop of Bitcoin's increasing integration with the traditional financial world.
It's a complex picture,
Yeah.
but understanding these nuances is what makes navigating the Bitcoin market so intriguing.
Okay, so to our listener, considering all these different viewpoints, what's your outlook on Bitcoin's short-term future?
This is where your own research and analysis come in.
Right.
We've given you some of the tools and insights.
Hopefully.
Now it's your turn to dig deeper and form your own conclusions.
Don't just take our word for it. Explore, analyze, and form your own opinions. We've laid out the chessboard. What's your next move?
I love that analogy. It's a game of strategy, information, and a bit of calculated risk.
And that brings us to the end of our deep dive into Bitcoin's recent price action. But we're not done yet. There's one final and crucial piece of the puzzle we need to discuss, and that's the question of what all of this means for you, the listener. How can you apply these insights to your own investment decisions? We'll tackle that in the final part of our deep dive.
Okay, so we've explored, Bitcoin's wild ride, the technical signals, and the wider market forces at play. But let's bring it all home. What does this mean for you, the listener, and your own decisions about Bitcoin?
That's the million-dollar question, isn't it? It's easy to get lost in the data and the analysis, but ultimately it all comes down to how you apply this knowledge to your own situation.
Exactly. So let's distill this down to some, actionable takeaways.
Okay.
We talked about Bitcoin's increasing connection to traditional markets. So does this mean the days of Bitcoin being this completely independent, uncorrelated asset are over?
Well, it's certainly becoming more and more entwined with the global financial system.
Remember how it reacted to that U.S. employment data? That's a sign that Bitcoin's no longer operating in a vacuum.
Right.
Factors like interest rates, inflation, even geopolitical events can all have an impact now.
So keeping an eye on those broader trends is crucial.
Absolutely.
It's not just about watching the Bitcoin charts anymore.
Right.
You need to be a bit of a global news junkie these days.
You do.
Okay, so that's takeaway number one. Broaden your horizons. Look beyond just the Bitcoin-specific news. What else should our listener keep in mind?
Or remember that technical analysis can be a valuable tool,
For sure.
but it's not foolproof.
Right.
Don't get too caught up in trying to perfectly time the market or chase every little price movement.
Right. Don't become a slave to the squiggly lines.
Exactly. Use those tools to inform your decisions, but always consider the bigger picture, the fundamental factors driving Bitcoin's value.
Okay, so takeaway number two. Use technical analysis wisely, but don't let it rule your life.
Right.
What else?
Now, the third takeaway, and arguably the most important, is to manage your risk. Bitcoin is still a volatile asset. Prices can swing dramatically. Don't invest more than you can comfortably afford to lose, and be prepared for those ups and downs.
Easier said than done when you see those huge gains or losses flashing across the screen.
I know it can be tempting to get caught up in the hype, especially when you hear stories of people making fortunes overnight. But remember, those stories rarely capture the full picture. The risks, the potential for losses.
Right, those Bitcoin millionaires probably have some, nail-biting stories to tell too.
Exactly. So don't let fear or greed cloud your judgment. Develop a clear investment strategy. Stick to it and stay disciplined. That's the key to navigating this exciting but often unpredictable world of Bitcoin.
So there you have it, our listener. 3 key takeaways to help you make sense of Bitcoin's wild ride. Broaden your horizons, use technical analysis wisely, and manage your risk.
And remember, the journey of understanding Bitcoin is just as rewarding as the potential financial gains. Stay curious, keep learning, and don't be afraid to ask questions.
Couldn't have said it better myself, so until our next deep dive, happy investing, and remember, fortune favors the informed.